In today's video, we are going to draw up the charts and we are going to have a bias for the following day, because when we take an entry tomorrow, we need to know where is the discounted area, where is the premium area. We need to know where's the best place to take a trade. We need to know where is our take profit going to be. So we need to draw up the charts. If you just follow along for the next 10 minutes, I will show you what I do as soon as the market closes, or maybe 10 minutes before I'm at the charts. This is exactly what I will do. So the first thing is I will go to my fib tool. I'll come to the previous day's candle, high and low. I'll just draw a little fib here. Now what this is doing, just with this one tool, don't need any indicators, this just tells me this 0% is the low of the previous day, this 100% is the high of the previous day, and this white line is the 50%, the middle point. Okay, so the next thing I do is come across to my volume footprint. Okay, now I want to know where was the most volume traded the previous day. Okay, so what we're going to do here is we're just going to grab our rectangle tool and we're just going to draw. If you can see here, there's a little black. I will just do this and zoom in. If you can see there, there's 931. Just at the top, there's a VAH and a VAL. This is where the most volume was traded. Okay, this 931 is just a delta, but this is where the most volume was traded during this session. Now, why is this important? Whenever you tap into this area, it almost always fills. It's called the 70% area. So I've got this box here now at this value area, and I can tell the next day when we tap into this area, it will fill most of the time. So the settings for this is in the symbol. You can see here the value area. I have it set to 70%. So 70% on the trading in this candle was done in this area. So we'll come back to our normal candles here, and we can see we've got our value area drawn out, and we have our high, low and midpoint drew out. So next thing, we're going to drop to the lower time frames. Let's go to the 5-minute time frame, and we'll just realign some things. So we will just pull this over here, because the likelihood is we're not going to be in the market until maybe just before the New York session, which is 2:30 my time in the UK. And I'm not going to be in this until any more than, let's say, 6 p.m. So that's my zone there. So we'll just change the colour here to grey. Now, what we're going to do next is very important. So we take our rectangle tool, and from this 100 area down to this 50 area, we draw a rectangle. Now this is going to be my sell area. Oops. Sell area. This is where I'm looking for sells. And we'll draw another rectangular box here. This is going to be my buy area. So what we've done here is we've looked at the previous day's candle, and we know this is the upper portion of the previous day candle. This is the lower portion. So this buy area, this is where you're getting a discounted price. Okay, you don't want to be buying up here. This is where people go wrong. They see this trending up or breaking structure, and they think I'm going to buy, and you're buying here in the wrong area. You should be buying in the discounted area and not the premium. So this red sell area, I've just wrote sell and buy for simplicity. Okay, but this area here where you see sell is where you should be selling the market. There's value here. Okay, premium and discount. If the market comes down here into this green zone, you're in a discounted area. You're at the bottom end of yesterday's candle. Okay, you're in a discounted area. That's where everybody thinks, oh, the market's going down, oh, we've broke structure, oh, we'll sell here. No, you buy here. Okay, this is a discounted area. This is where you're getting a good price, because if the market goes up here, it's going to come right up into this sell area. Also, we keep an eye on this area, which is our most traded area yesterday. If you have this on your charts, I guarantee you, when you see this getting tapped into, either from the bottom or from the top, when you see the market tapping into this area, it will always fill. When I say always, a high percentage of times, maybe about 80%. And, you know, that's what we're looking for as traders, 80%. So if it fills, taps in here, it will fill 80% of the time. And if it's coming down and it taps this zone, it will fill. This was the area where all the trading was done yesterday. It's called the value area. So that's it for this video. This is how I draw up my charts. I always say in all of my videos, you're building a story. That is what we're doing here. We're building a story on where is a value area, where is a discounted area, where is a premium area. You definitely don't want to be selling when you're down here, and you don't want to be buying when you're up here. You're putting yourself at a disadvantage. If the market comes down here and breaks this structure here, lots of people will go in short, but they're in a discounted area. This is where you want to be buying. So I hope you found this video useful. Please leave a comment below if you draw up your charts like this and you find any success. Personally, I use this on indices only. I've never tried it on Forex or anything else. US 30, the Nasdaq, S&P, DAX. That's the kind of things I'm trying this on. So until the next video, stay safe.